Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, April 29th, 2022, aka D-Day is what I've named today. Now that Apple and Amazon, the last of the two big market-moving leading FANG stocks, are FANG plus T. I need to change that acronym now because Facebook is no longer, doesn't really move the needle. Had that big run yesterday, and it didn't even, it really doesn't have the impact, the weighting that it used to. I mean, heck, I haven't updated this since December 31st. This was as of December 31st. Facebook was almost 5%, and I imagine that weighting is a lot less now in the in Nasdaq 100, and of course even less than the S&P 500. But all right, so calling it D-Day because this is the I believe a pivotal battleground between bulls and bears. So and I'm speaking metaphorically, buyers, sellers, supply, demand. Say what you want about it, but I believe this is a very, very significant level right here, about 317. You have the recent double bottom lows. It's been being tested for the last few days. We're still above it. It was resistance here. We broke out to an all-time high, back tested it, went through it, lost it, but regained it, back tested successfully, and went on to new highs. Put in divergent high, and then so forth and so on. So that's it. So tap, tap, tap. And yesterday I've been clear for months now my thoughts, and I just I'll continue to reiterate it because believe me, I will pivot if need be, and I may be pivoting next week. This is I'm calling this today D-Day because they're out. It gets really everything out of the way. We already know what the Fed's going to do at the next meeting, so that's going to be for the most part a non-event. They're going to give us 50 basis points. They've made it pretty clear. It's what they say a little bit, but barring a geopolitical major event, shock to the markets, that's it. All the big companies are out of the way. There's not a single company that's going to report anything now that's going to take the market down big or move it up. So those companies are out of the way, and that's why I'm saying this is D-Day here. And by the way, D-Day, referring to the invasion of Normandy. We didn't take those beaches on the first day. In fact, we didn't take anything on the first day. So this battle, just like that one, may go into next week. In fact, I think it will, unless we have something really big today. Here's the thing. We're in close proximity, so only battle right now that can be definitively won in the next day or so would be the bears taking that level out. Why? Because if the bulls hold here, they're still in very close proximity to that support. So unless the Nasdaq 100 gets back up here, we take back the 200 days, the risk right now is to the downside. So I gave you my thoughts yesterday. I gave you trading strategies, and I want to also say this because I didn't say it yesterday, and if I didn't say it, it should be clear. But I'm gonna just get it out here now. This is, and maybe I've said this, maybe I said it yesterday or not, or earlier in the week. This is, bar none, without a close second, the most bullish setup. I said that back here. Remember, a couple months, a month or so ago, last month, and it turned out that was the biggest rally in over that period of time in months, if not a couple years, right there. So I said it then, and I'll say it again, but even bigger this time, because last time that divergence, it showed through on the daily, but it was really, I was focusing on that on the 60-minute chart. Remember that bullish, falling wedge? There was it right there. Divergent low, and then the breakout. So that was powerful rally. And remember, I pivoted back here, told you guys I pivoted and went long for some of that, not all of it, and then started scaling back in short here into those swing / trend positions where I remain short right now because of what I expect. Now, with that being said, what I want to say is if you are bullish, or just a market agnostic, you don't really, hey Randy, I'm neither bull nor bear, I just trade the charts, I get that, then you can go long right here. You still are in very close proximity to that support level, and that's technical analysis 101. You buy pullbacks to support with a stop below. So real quick, I'll give you a couple scenarios. If you are bullish and you go long, you do want to stop not too far below the that 317 or more so the recent lows right there, right? That's the prudent thing to do. You buy there, mitigate or minimizes your losses if wrong. Now, this market for years now has been plagued with stop raids and whipsaws, and I think it's a large part due to the algos. They know where all the stops are sitting. They know there's a mountain of stops down here, and so sometimes I'll pull it down and reverse it. Now, look. Here's my, I'm trying to share trading tips here. So if you are a bull, you do need that stop, and you may get clipped and then run up. But if you don't have a stop, we could have a waterfall sell-off if that level's taken out, and your losses could mount, and they could mount very quickly. So what I would do if I were bullish and I was going long here, I would have that stop. And look, if they do that and they take it down, they reverse it, then you can get back in once you see it's clear that it was a whipsaw. Once they recover back above, solidly back above 317, especially if, let me put back my RSI and PPO, especially if the, I don't want the histogram here, put that back. I wanted the RSI and the PPO, which is right here, especially if the divergences are still intact. Remember, these are potential divergence, so if we can reverse or hold here and we move up, the PPO is going to cross over. So, okay, that's the bull scenario. Flip it around backwards. If you share my mindset, which I know is contrarian right now, or at least in the eyes of many who think this is just an adjustment for the rising rates and we're going to continue higher. It seems to be the vast majority of analysts that I've read about and heard on TV recently. So anywho, so if you are of the mindset that we're going lower, same thing, and you're already short. This was my last, scale in zone here. I mentioned on the site, getting back into swing and trend shorts up to that 200-day moving average. About from there to there. If you also are short from there, or wherever you're short from, even if you short right now, you also want to stop not too far up, because if they start to rally this up, they're going to confirm these divergences, and we could continue on up. We could take out the 200s. There's no sense. We could go to new highs. Anything's possible. So you're going to have to pick your stop. And then likewise, if they do that and you get clipped out, let's say the first decent resistance I have here is about 335.50. So if you wanted a relatively tight stop, that would be it. If you're going for those deeper targets I have on the downside. Now, if they stop you out, they did that, they popped your stop, and then turned around and then take out the lows, same thing. You can always jump back in. Like I said, I'm pressing my shorts right now. Despite the blowout quarter for Apple. I'm going to speak to that in a second. I talked to you about the monthly charts before. QQQ is poised to close unless we reverse today below the 20-month moving average. That is indicative of a bear market. Every bear market that we've had, remember, we haven't had one since in over a decade now. That was the last one back here, what I considered bear market, 2007 to 09, and then this one here. And we've had a couple intra-month breaks below, but throughout the bull market, this 20-month exponential moving average has done a great job of defining bull bear trends. Even when COVID hit, like I said, they took it intra-month but parked back above it. So we're going to get that possibly this month, but not by a huge amount. And then more so, there's still the S&P 500, who's comfortably, as I talk right now, early in the session, somewhat comfortably above it. We'd have to fall just to get to it about 2%. And so to have a solid close below it, we need to drop about 5% or so. So could happen today. And if it doesn't, it's going to start next month. But I do remember, I have a lot of other long-term trend indicators on the weekly and all the way out to this very significant monthly chart here. One of those is a bearish PPO crossover. That is associated with all the big drops, 36%, 20, 15, 22. These all were double digits corrections in a in a bull market. But here's our last bear market, 57%. You can see the histogram was red, and so we've had that now. So that one indicator is bearish and remains bearish right now. And we had that flip on QQQ all the way back here. It's been now 4 months, and you see these bars are getting bigger and bigger. So that is in large part contributes to my overall bearish bias in the fact that I love divergences. I love going long, especially on the daily chart, positive divergences. But I'm going against what I'm seeing there. I'm overriding what's happening on the daily time frame and the 60-minute time frame with what's happening on the longer term time frame. Because if I'm right, that's a bear market, and then those divergences are either going to not play out at all, or it'll play out for a relatively minor bounce. And again, I may very well pivot. I will let you know if I pivot. That means closing out swing and trend shorts, and or even layering into longs. But I can tell you it's not going to be today. I don't care how we close the day, how far above here. We're not going to rally, 10% today. Again, it would be next week at earliest before I decide to reduce short exposure. I'm pressing it pretty hard right now, and we'll press it even harder if we take out those levels down below. All right, so you guys know the near-term levels. Let's keep it. I'm going to keep it pretty simple for now. That's it. This is a D-Day or D-Week, whatever you want to call it. Well, D-Day. The Apple just reported on Amazon last night. I'm going to talk on those two real quick, and then I'll wrap the video up, get it out to you guys. All right, so we'll start with Amazon. Amazon getting whacked pretty hard, down almost 12%. Remember, we had divergence here recently, but we didn't at this point. Now we still do. We have potential divergence, but it's holding on by the skin of its teeth. It is still there. You can see here's the PPO right now, still making a higher high than the previous. I'm sorry, a higher low, as is the RSI. So if Amazon over the next week or so can reverse, hold the line here, you've got some support coming in around 224.48 right here. That's the first support that I see. So it could even head down a little bit more, might keep those divergences. There's a little bit of room on the downside, and then that could play out still. All right, so I suspect the buyers will probably step in if we can get there. Right now, it's in no man's land. It's between support and resistance. So I wanted to point that out. So here's a case. We had divergence there, and it did play out for a nice rally, tradable bounce. But this is typical of a bear market that got sold into, and we made a new low. And this is a momentum indicator, guys. So, right now the momentum is pointed straight down, so we could continue, and that would be quite bearish if we can go on down and burn through the divergence. Let's look at Amazon from a longer term perspective. This is the most important. If there's one level that I would have to say is the most important level for Amazon, it's this blue trend line. This comes off the all-time low, or the initial, when the stock first started trading, the IPO came out in 1997. So this is its primary bull market trend line, and we're pretty much, it's not super well defined. I'm going to say that right now. I had a little violation here, made a reaction there, and I really had it up here. That's where I should have had it on this recent tag there. It might end up being pulled down to this level, but the way I have it drawn is here. And I also had an alternative trend line which was taken out. And then there's also price support. So on this weekly chart, it doesn't look good. And again, these are the things that go into my analysis. These are market leaders. If these market leaders die, and so far they've taken them out to the shed one by one, and the only one that they haven't executed yet is Apple. Well, we've seen Amazon now down from the recent highs. I'm just going to ballpark it for you. The stock is down 33%, so it's been cut in a third in the last few months. And so by most metrics, that's in a bear market right now, and there's no signs of a bottom yet. You have divergences, but the divergences may be burned through. And you're also breaking support. If Amazon hits my bear market target, my minimum bear market target, is going to be all the way down here, 2043, and that's another 20% downside. But again, the stock has the potential to reverse, to regain, and that would be one of those bear traps where you break support and then you recover, a false breakdown. So if it can get back above really these two recent lows and do it soon, as in next week, then it has the potential, especially, right here, you can see all these recent lows. Call it about 27, what's that line at? 27.86 right there, 27.87. If it can get back above there, that's going to be pretty darn bullish. All right. So otherwise, that's resistance. Any bounce back rally to that level would provide an objective shorting short entry, but anything much above that, yeah, especially if the divergence is from tech, going to be bullish. So there's my analysis for Amazon. Again, another leader, market leader that has now been, I think, safe to say, executed. It's not going to zero. Don't get me wrong. I don't try to use hyperbole like that. It's not. I'm not saying this stock is going to, it's done, never coming back, never going to new highs again. No. Just that we're most likely in a bear market, especially when you strip all these lines on my chart away, and you look at it this way. You have this boxed in area right here. This is so many stocks in the market have done the same pattern. They just went sideways for a year. With Amazon, it's almost a 2-year sideways slog, and now we're starting to drop out of that range. That, to me, is the end of a bull market. Okay, and this is early stage bear market action with more to come. And I know that opinion's contrary because I've been turning the TV on more than I usually do, just trying to hear what the analysts are saying, listen to what the earnings came out on these guys, especially Apple. I'm going to talk on that one now, and I can tell you, CNBC last night, they march out as they always do. They parade out, and the majority of fund managers are always going to be bullish. That's just the nature of the financial markets, and it should be. The markets would go up a lot more than they go down. So. But at this point in time, where to me, I'm clearly bearish. I see clearly deterioration of sell signals, market breadth, everything that I've covered, and I see more downside. Obviously, they didn't the ones that they had on there yesterday, and they did march out their token bear, just like Fox News is always going to have, one token liberal to throw into the argument, and CNBC or MSNBC will have a token conservative, just for that little balance there. You're going to have a the token bear wasn't even a hardcore bear. He just was a little bearish on Apple, but then he conceded when they blew it away. So I'm going to talk on that now. Let's talk on Apple earnings and where they're going to go. Well, they're down now. They were up earlier today. Here's what it looks like. All over the place last night, like usual. Tell you, don't ever read too much into the initial reaction. So here's what Apple did. There's where we closed yesterday, right here. Pop, initial drop, big pop, and then the pop got faded, and we're about where we were. We're down 0.65. So we're almost flat from where we closed the day yesterday. So let's get away from that. Let me just turn that off, that after hour stuff. All right. Now let's talk about the technical posture of Apple, and let's talk about their track record after earnings. And we'll talk a little bit about these earnings, and I want to just show you some comparisons. So the big levels to me are the 200-day moving averages, which are on this chart, blue and red lines, simple and exponential. They do a great job on Apple of defining the trends, especially the bull and bear markets. When you're above the 200s, you're in a bull market. And when you're below it, their last bear market Apple was in, it had a 45% drop back here in 2012, 2013, but that was just a bull market correction. The last bear market we had was 2007 to 2000 and early 09. It was a 62% drop in Apple. And of course, you were below for the majority of that, especially the big leg down. You were below the 200 days. So those need to get taken out. And my target remains the primary, this long-term uptrend line right here from late 2009, as well as that 82.64, which is what same thing I'm targeting in the equity markets, what I call the pre-COVID highs. And so that, if I am correct, and now we need the sell signal. This guy has not been taken out yet. This is the market leader. This is the big dog. Make no mistake about it. It's the only $2.6 trillion company in the world, and it's not just that it's $2.6 trillion. The Nasdaq 100 and the S&P 500, most of our indexes are market cap weighted, so therefore Apple has a bigger impact on the market. So point is, most of the fangs have already been taken out and shot, right? Apple hasn't. It's off the highs, but not too much, and it's also holding on to support this trend line right here I showed you, right? But here's what I wanted to talk about. Let's talk about earnings real quick. All right, so Apple, we've been in a bear market for a while now, for well over a decade, since really the beginning of 2009. So there's not a lot of corrections in recent years. It's hard to pull this data. I just went back. You can eyeball this chart and see the two biggest drops that Apple has had in recent years, right there and right there. And this drop back here was 37% roughly, and this one here was about 35. So Apple lost over a third of its value in those two drops, biggest ones. Now let's talk about what happened. See these little arrows? That denotes earnings report. So we had this one on January 27th, 2020. Let me pull that one up for you. Okay, a quick Google search, bring up what happened then. This is published back on January 28th after they reported. Apple rises as earnings and iPhone sales smash expectations. Well, that's what happened last night. I told you they're going to have a blowout quarter. They always have a blowout quarter. Apple is what I refer to as an earnings juggernaut. You can almost count on them. They're going to beat the here, let me see if that can go away. There we go. All right, so here it is. Let me just show you. Okay, key points. They reported revenue. They blew it away on revenue and profit, above expectation. Biggest quarter of the year. It was sort of a blockbuster quarter all the way around. Tim Cook cheered, and then you saw what happened. That was, again, let me just show you. There was earnings. There was a peak. Yeah, with the COVID hit, but again, it was priced into the technicals. This wasn't random. I had it on right there. I had it at a divergent high, same kind of sell signals. And we would have been short Apple, or the market that we were at that point took out the little smaller trend line and then the larger trend line. All right, go back to that chart I was just on. All right, so here's one. No COVID or anything in there. Stock again fell about 30. Actually, I'm showing now bigger than that. It was about a 38% or so drop. They reported on November 1st, 2018. Okay, so let's see what they said here. Let me go to that one. I think it's right here. Yep. Okay, Apple reports fourth quarter 2018 results. They announced results. Apple posted revenue. Blah 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 blah. I'm looking. I thought I had one. Let me see here. Here we go. All right, yeah, there it is. So their phones were up. I was trying to see. I thought I had a report pulled up. Maybe this wasn't it. I've got quite a few windows open in my browser. There it is. Both figures are also company all-time records. Blah blah blah. Here's their quote. We're thrilled to report another record-breaking quarter that caps a tremendous fiscal 2018, the year in which we shipped our 2 billionth iOS device, celebrated blah, 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 and achieved the strongest revenue and earnings in Apple's history, said Tim Cook. Only thing missing there was his little exclamation mark from Tim. He's so excited. Over the past 2 months, we've delivered huge advancements for our customers through new versions, blah, 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 blah. And we enter the holiday season with our strongest lineup of products ever. So the guidance was there and all that. Anyways, it was a blowout quarter. They all were. And what happened? Again, this is what happens after a stock's going up, up, up. After the market goes up, up, up. Earnings are great. That's usually where markets top. And then, boom, the technicals kick in. And what it is just, there's when the last bull is about his or her share, there's no one left to buy. So Apple's a great company. Apple's not going away, but this is what I'm watching for. So this is why it's D-Day to me. The bears need to take the market down. They need to take Apple down over the next week or so. Today, the stock is flattish, down 0.41. So that's a flat day. So I'll be watching that. The support levels that I'm watching. We're here on a daily chart. It's this trend line and the 200-day moving averages, and I have a yellow line there at about support line about 156. But really, the recent lows that should do the trick. Here, let me pull my magic number down here, and I'm going to set a price alert right around the recent low. And there's also resistance. It was resistance here, and then that's that recent low. So 150. That's the magic number. I'm going to round it off. Everybody loves round numbers. And I'm going to set a price alert. And so this will be Utah Beach. If the bears can take Utah Beach, And then Omaha Beach will be that level on QQQ. I gave you the recent lows. Then they have won this battle, and which case they're probably going to win the war. However, if the bulls can defend and hold the lines, these lines I just covered, they've won this battle. At least for the time being, so the bears aren't going to win the war, at least not yet. Doesn't eliminate my long-term targets that I have on the QQQ. It just means it might take longer to do it, and we're not going to do it unless these levels go. So that is it. Magic numbers: 150 on Apple, QQQ 317.35, and again, the takeaway is don't get wrapped up in fundamentals, and that's where analysts are just baffled. They get it wrong time and time again. I didn't hear anybody last night, and when CNBC paraded out, their handful of analysts all bullish on Apple, except again the token bear who conceded once he saw the numbers and said, "Oh yeah, wow, great quarter," but nobody talking about the technicals. So that's where I've been doing this long enough. If you're trying to buy a stock or invest on fundamentals, if you're Warren Buffett and you've got a long-term time frame and you're really good at that, yes, there is absolutely something to that. Fundamentals over time do matter, and they will play out over time. But that can take years. You can be really early, too early on investment. If you're patient, pays off. Buffett and Berkshire Hathaway can do that. Us as traders, you can't, most of us won't tolerate a position going 30% against us, 30% drop or so, or taking 2 or 3 years to pan out. I'm a trader. I look for almost immediate gains and, keep losses relatively tight and, relative, of course, and it also depends on what time frame I'm trading and all that. Right now, I'm talking trend and swing positions. So I'm playing the long game on those. And my long game, is still, these are my targets that I've shared before, about 299 to 300, next stop on QQQ, with a chance that we may go through that one with very little, if any, reaction. Because if I'm right, this is going to be a reckon. Again, it'll be D-Day. Bears will have won and taken out a big support level. And if Apple fails to rally on last night's blowout quarter, which I didn't, I'm sorry, I forgot. I should have went over that because I didn't do that. Last night, is this it? Yep. Here's the latest. This is what they reported. So they blew it away. They beat expectations on top and bottom line, recording record revenues despite continued supply chain disruptions. Annoying little pop-up there. Here it is. Revenue, 97 billion versus 94 expected, blew it away. EPS, 152 versus 142 expected, blew it away. iPhone revenue beat. Mac revenue beat. iPad revenue beat. Wearables, slight miss, almost even there. Services beat. And here's Tim Cook coming out cheerleading it. Quarter's record results are a testament to Apple's relentless focus on our ability to blah 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 blah. We are just anyways, the usual stuff. And so look, right now it's a stalemate. It's a Mexican standoff. We're again virtually flat in Apple, so that one I'm going to be watching. And if it breaks, then I think the market breaks. And I told you what levels to watch. First level to go that'll be big would be the recent lows. We'll have dipped back below those 200-day moving average. Then that trend line comes right in at the recent low. And then, like I said, I think nail in the coffin comes if and when Apple takes out 150. And if it does, you don't want to be long. You want to be short. And you may want to be short now. It just depends if you're an aggressive trader like me, or if you want to play it safe. You have the numbers that I gave you to watch, and then you can layer in or go all in however you want to trade. Or like I said in the beginning of the video, if you're a bull, Apple is above support, and history shows Apple and the markets, you buy pullbacks to the 200-day moving average in a bull trend, that's where you do well. And so trade it as you want. All right, guys, I'm going to wrap it up here, get the video out to you guys, and sit back and watch the battle. Alrighty, this has been Randy Finney with Right Side of the Chart. Have a great day.